Good morning, natural gas traders. Welcome to the every Saturday natural gas update. And this is where I break down natural gas price action for you guys in support and resistance levels, as well as what's the most likely scenario going forward where the price action should be going. And you guys can potentially look at these levels to play off of, as well as the psychology of why the natural gas price action. And so we'll be looking at futures for NG for natural gas, as well as ENG, which is the tradable ticker for natural gas, and BOIL, which is the 2x leverage on the long side, and KOLD, which is the 2x leverage on the short side. All right, let's take a look. So since last week, we were talking about this wedge, what we've been looking at for months. And it's a perfect looking wedge because of how many times they have bounced off of it here. 1, 2, 3, 4, 5 times. And rejection from it as well on the upper side. 1, 2, 3, 4. And we have finally broken out of it right there on last Friday. So I mentioned that when we retest the prior resistance, so you can see this wedge mirroring looking line was acting as prior resistance, and we broke out of it. And I wanted to see a retest of that level. So when we came back to it this week and retested it, we'll bought the dip. So that's a perfect sign for the bulls. So we came back into it, and bulls said, "Nope, we are going to come back out of that and bounce it as support." So when we are above, when the price action is above a prior resistance, so this was acting as resistance before, and now we're above it, it wants to act as support now. So when price action comes down to it, and it acts as support, it's a very good sign for the bulls. And that's exactly what happened. So once we bounce off of that, you can see the bulls just came back in and bought that move. Where is the most likely scenario that going forward we're looking at? So next level for the bulls, I'll be looking at is this 2.79 level right here. And it coincides right there with this one where we closed right at that level, as well as these triple wicks right here. We couldn't get over it as well. And you can see before that, it acted as support right here. It bounced off of it. And then when we came back below it on the next candle, it acted as resistance. Also support here. So that's also a key level for us to break after we break this prior one. So that would be 2.86. So we can break this one. Bulls are very lucky heading to this one. And if we do break 2.86, then there's actually not a lot of resistance left. You can see just only one volume here and very thin traded volume here as well. You can see the volume is actually kind of low here. So the less volume in a certain area, the more easier is for price action to flow through it, regardless if we're coming down or if we're coming up through it. As long as there's little volume there, it's easier to flow through it. The psychology of that is for volumes is, let's say, Joe, Bob, Smith, and Will bought over here, and there's only like 6 of them. And when a price comes back to it, if they wanted to sell because they wanted to break even, there's only 6 of them that wanted to sell. And once they sell, there's no more supply left. So demand is higher, meaning when demand is higher than supply, it'll easily go through it higher. Just the same thing if we're coming down from we're dropping, right? There will be more there'll be more supply than demand. Okay, 1 second. Just gonna bring my chart back. That's not it. That was weird. So yeah, so we're coming back down to it. It just means there is more supply than demand. So same things, concept. So the next level for if we do break this, then you can see history chart here. There is one straight move down. There is no consolidation in these levels, meaning it'll be very easy for the bulls to bounce higher when we come back to this level. The similar concept to gap fills, especially when there's a gap. When bulls come to that gap, there's no volume trade in that gap. Then that means it's very easy to flow through it, and it'll just be price discovery action until a level is found. This will act as similar kind of like gap because of how thinly traded these volumes are, and it's just a one candle straight move down, so it's very easy to move through it versus something like this down here when we're coming up into these resistance, whereas there's a lot of cluster volume in this area, so it takes a couple of times to break through it. This is, these ones. So that's the best case scenario for the bulls, obviously. And if we do zoom out into the weekly time frame, I've been trying to talk about this for a while, that we want to form a weekly uptrend, and we actually got our first weekly uptrend this week. So congratulations to the bulls. You can see this is the initial move, and this is the pullback. But we did not, this low did not break the prior low, so that sets the pivot. And now this next move, I said last week, we need to break above this prior high right here, that 2.678 high. And we did this week, and we closed above it. So that is a confirmed weekly uptrend for the very first time since any one of us can remember. Let's see here. It would be over here for that weekly uptrend. Move up. This is the pivot. Break above the prior high. Similar concept. And that's the weekly uptrend the last time we got one. It has been almost a full year. You can see on the weekly chart, this is a straight move down. And then this was the weekly downtrend continuing from over here. But as of now, I'm just going to erase that real quick. Give me a second. So now we have our very first weekly uptrend, the bulls. So the most likely scenario is that we'll probably get more follow through from the bulls because we just confirmed that weekly uptrend. The last thing I want to see as a bull is next week, especially on Sunday, you have a gap down below this prior high on futures. Sometimes we have those gap downs, but that's the last thing bulls want to see. And if we do hold above this, I would say likely we'll come back, retest, bounce off of it. That would be the best case scenario, because bulls would be looking to buy that dip. If we do retest this prior resistance, now it's acting as support. And then if bulls buy that dip, we will likely head higher to that 2.8 level that I was talking about. And we have our weekly uptrend. So let's take a look at how the monthly shapes up on a monthly time frame. So monthly is shaping up. They take a long time to shape up because it's one candle per month, right? So it's one big move and chopping. So this is one move as well. So we still need a bigger move up on the monthly for us to potentially shape that lower high pivot. So for next month, we get a green candle, right? Big enough for the third month where we get one just slightly below it, and that's a consolidation shaping up, right? And the following month, we have to get one back above that for monthly uptrend to confirm. So that would take us at least 4 months into it. So probably into October. So we'll be seeing how the next month closes. But sometimes let's go back to the weekly. So weekly is definitely looking good for the bears. As someone commented saying they took a position on KOLD, the 2x leverage short side. The most ideal scenario for bears now is that we close below this. We come back into this range that's 2.68 level. That means it's a weekly uptrend confirmed with no follow through if we just come straight back into it on Monday or Tuesday. So that would be the best case for the bears if that happens. So let's take a look at the daily chart, see what happens if which levels should the bears be watching. So if let's say we gap down here on Sunday and come back right into this weekly range again, that's a weekly trend with zero follow through. So that's a initial red flag for the bulls. Then we're likely coming back down to this level, 2.514. This 2.5 range, which coincides exactly with the prior wedge resistance. So we'll likely bounce here. And then if there's a shallow bounce, then we could potentially come back into this level again at 2.4. Best case for bears. As of now, the momentum is in favor for the bulls due to it just confirming its very first weekly uptrend in a long time. So personally, I wouldn't short it here. Um, I'm not in a position either long or bull side, so I'm biased to any of the positions. So I'm giving you guys scenario from the both directions to give you guys a better understanding on you guys' positions. All right. So yeah, so if you have a short added on Friday, um, I would put a stop loss above this 2.8 range, because if we do break that, we're probably going to get higher. And yeah, and if we break this, we're very likely heading to here. And if we do break that, then it's easy up to this level. This one is the stronger resistance zone right here. So keep watch of that if you have a short position. And if you are a bull, you can set your stop loss. Depending on how conservative you are or risk of a taker you are, personally, if we come back into this right away, if we do break this weekly uptrend, the 2.68 level, and come straight back to it with no follow through, then that's a little bit of red flag. I would sell my position as well, but it's up to you guys to see what you want to do with your positions. But all right, let's take a look at the tradable ticker UNG. So UNG is a tradable ticker for NatGas futures, and similar idea where we broke out of this wedge um, on Friday last week, and we actually retested it as well and bounced off of it. So it's a perfect sign for the bulls. You can see on this pullback, it was low volume, meaning the bears are a little bit tired. You can see there's not a lot of selling into that level. And once the bulls see that there wasn't that much selling, and we bounce off of that, prior resistance now becoming support. You can see the bulls came in, and there's just more volume coming in from the bulls now. And the step, right? So the next level I'm looking at is this level, this 8.12, because you can see this is a similar situation where it's more like a one straight move. And if we do come back up to this level, you can see how much of a cluster this area is. That's going to be acting as a key resistance zone for the bulls in this area. So the levels are going to be levels to watch for. And obviously we got to break this prior high as well before to even retest that area right here. And this is the very first step before we can head to this strong resistance zone. Breaking this one should be a lot easier than breaking this one. So for the bulls, most ideal scenario, we break that, then test this, slight pullback, and then potentially bounce off of this prior resistance and retest it again, see if we can break it or not. That's the most ideal scenario for the bulls. For the bears, obviously we want to come back down and reject this. If we can't get over this as a bull, then that's a big red flag for me. And if we just straight back shot back down to breaking this level, so I want to see bulls hold 7.16. Bears can take it back down below that, and we're coming back into this cluster again. See how many times we try to test to break above the 7.16 over here, like 5 times. Over here as well, another 2 times. And over here, it bounced off of it as a support when we're above it. So it's a very key zone for the bulls and the bears. So if the bears can take it back down to this zone, then that's a huge red flag for me. So yeah, if we do break that zone, we're likely coming back down to this 6.63 level. Yep. And let's take a look at the weekly. Weekly UNG does not have a weekly uptrend yet. You can see this is just one move. There's no pivots and breaking of prior highs. It's just one straight move. So the most ideal scenario for UNG is for one more week of green, and the next week's um, candle, following week candle closes below its prior week, and then we break above the prior high for that after the third following week. That would be the most ideal scenario to form that bullish weekly uptrend. Now, this move is big enough for the next drop. We can potentially set that higher low because it's 28% move, right? So yeah, so that's a lot of room for the bulls to work with now. So that's very good. Just like this drop over here, 36%, a lot of room for bears to work with on that little bounce to potentially add more short position. And this was a bear break with no follow through, and the bulls bought the dip. Same thing over here, slight bear break, no follow through, bulls bought the dip. You can see every time it just doesn't drop as much as it's used to anymore. So that's the psychology of falling wedge. Actually, every time it drops lower, nobody wants to sell anymore. The price is just too cheap. Every time it goes lower, price is too cheap here again. Nobody wants to sell, and buyers buy that back up. Same thing. Came back down a little bit, just slight lower than the prior low. It's too cheap. Nobody wants to sell anymore, and buyers come back in. And after that, the seller just gets exhausted over time, right? Nobody's want to sell, and you can only get a little bit of profit as a seller, just a little bit more profit as a seller, and you get exhausted, and it flips to the other side. Now there's more demand, so they would cover their shorts and play on the bull side for more gains. So essentially, this would be, I would say, is the most notable bullish week for natural gas after looking at this chart for months. You can see, even though we had a very strong week over here, 44%, this was just one straight move with no trend change. But now we're shaping up a daily uptrend, confirmed daily uptrend, and a weekly confirmed uptrend on natural gas. So the structure of the chart now is a lot stronger for the bulls now. So there's more structures and more supports in place versus a straight shot up and no structure in place. And obviously, a fades gives all its gains back from fades. Same thing as this move right here. Straight shot up, zero structures in place. Bulls gave it all back. Just fades everything. On this move, there's a lot more structured in place. Trend change is also in place in favor of the bulls. So if I'm a short, I would be a little bit cautious here now versus back here in this range. So um, yeah, it's definitely more favoring the bulls due to every daily trend change and weekly trend change are now in an uptrend. So make sure to be cautious of that. And oil is just a 2x leverage. So you don't want to chart this. So you just want to, if you wanted to leverage your 2x money, then you buy this on the long side. You can see it's up 9.9%, while UNG is up 5%. So it's like 2x of it, which is 10% of 5. And same thing for shorts, right? You're down roughly 9 to 10% on your short if you're on the wrong side when this thing goes up. All right, that's all I got for you guys on natural gas. And I have a stock market video from yesterday where I break down QQQ and SPY. So if you trade the market, make sure to check that out. And tomorrow I'll be doing the big tech stocks. So all 6 of them. That'll be NVIDIA, Tesla, Apple, Amazon, Google, and Microsoft. I'll do an analysis on those 6. And I will be talking about how they might shape up the market if they start to crack, because those 6 are weights the most in the tech sector, which is QQQ. And if they start dropping, QQQ is going to be dragged down, and that will be dragging down the S&P 500 as well. So yeah, check that out tomorrow, as well as the video from yesterday. And I will see you guys for an update tomorrow. And have a great rest of you guys' weekend.